Good morning, everyone, and welcome once again to the 2024 Potato Business Summit. My name is Mark Klompien. I'm President and CEO of United Potato Growers of America. And what we're going to do this morning is talk about the current crop year, potato crop year, the 2023-2024 fresh potato market. Talk about some of the varietal supply price situation, 10-year history. We'll take a look at that. We'll also take a look at a market outlook for the upcoming crop year as well. And as I typically do, I'm going to start with the yellow potato category. Here we have the 10-year history of U.S. fresh yellow potato shipments. And you can see going back to 2014, we were just under 7.5 million. That's been a very steady upward trajectory for almost 10 years now. The only exception kind of being there in the middle of the 2019 crop, saw a little bit of a decrease in yellow potato shipments. Not a lot, but the next year, 2020, it picked right up where it left off and continued its upward trend. And it's a pretty impressive trend to see happening in this yellow segment. It's the only category or only segment that's really growing at that kind of a rate. A little over 12.5 million is our current projection for the current year. Last year was the first time we went above 12 million, and that growth rate we've been talking about in this category just continues unabated. And it's a good steady pace, it seems like, though, because the market for yellow potatoes continues to be strong. Here we have a look at our yellow tracker for this current crop year. This is the first 5 months of the crop year, and it shows the weekly shipment trends. We're up 8% versus last year and almost 15% versus the 3-year average. So again, it just really demonstrates that continued and ongoing growth in the yellow category. That slide I just showed, the 12.5 million we expect to ship in total this year. That's about 4% above last year. So you can see we're a little bit ahead of pace at 8% above last year so far to date, to the end of 2023. And on this slide, this is just a summation of the yellow potato supply data that we just looked at. The average 10-year annual growth rate in the yellow category is a positive 6.1% per year. And again, that's just a really impressive number, especially in light of the fact that the overall potato category, at least in reds and in russets, is not showing that kind of growth. So very impressive what's happening with this yellow category. The growth rate year over year is a positive 4%. And along with that increased supply, the continuing demand increase seems to be there as well. And that's demonstrated by the fact that pricing continues to remain strong. If we use the 10 5-pound bale price as a proxy for returns in the yellow category, it's up in that $17 range right now. I've mentioned this before, but one of the interesting things about the yellow category is that there's really no single geographic region that dominates the yellow market, unlike in the red category and the russet category. The largest supplier of yellows right now is Idaho. Idaho and California have kind of bounced back and forth as the leading geographic region of yellow supply in the U.S. You see Kern County there is the second largest supplier. Both the San Luis Valley in Colorado and the Red River Valley continue to increase their supply of yellow shipments as well. And that's been happening for a number of years, along with a lot of the other geographic regions. And that just kind of continues to go along. Canada, if it were a state, would be the third largest supplier of yellow potatoes into the U.S. market. And again, just seeing that market supply continue to increase, but along with it, the demand continue to remain strong, bodes very well for the yellow category. Shifting now to the red potato category, you can see that this is a bit of a different situation than the yellow category. The trend on total shipments in the U.S. for the last 10 years is certainly in the downward direction. In 2014, we were just under 16 million. That was one of the highest years. I think that might have been the highest year of red shipments in the U.S. And since then, it kind of stabilized a little bit for a few years there, but then started in 2018 trending in that downward direction to where it is now, just above 12 million. It is the current year's shipments projected are a little bit above last year at 11.7. We're projecting a little under 12.2 million this year, so that is a little bit of a rebound. The Red River Valley had a good crop, as well as some other geographic regions that we'll take a look at here in just a minute. This is the red tracker, similar to how it was for the yellow tracker. This is the first 5 months of the year, and you can see the weekly shipments compared to last year as well as to the 3-year average. You can basically call that flat to last year. It's down only 1%, so virtually flat, but it is down 7% from the 3-year average. You can see the red shipments started off the year kind of on the slow side. They were well below the 3-year average up until about the first part of October, where it started to pick up the pace a little bit. And since that time, it's been running either slightly below or right near or a little above last year's numbers as well as the 3-year average. So that will continue for the year. The total number of red shipments that I showed you on that slide before was about 4% above last year. So that will pick up the pace a little bit going forward for the last half of the year. In the way of a summary of the red potato supply data, you can see here the average 10-year annual growth rate in red supplies is actually a negative growth rate, negative 2.7 per year for the last 10 years. Some of the major shifts in crop production from last year in the major red producing states: Idaho was up 16% in their red production. Kern County was up 14%. Some of the other large players, central Minnesota, the Red River Valley there, San Luis Valley, Wisconsin, they were virtually flat or give or take within that plus or minus 5% range. Florida, another large red producing state, large red shipping state, was down 14% this current year. Canada, the imports from Canada for last year were down 10.1%. In terms of pricing for the red category, the red price does remain more stable, certainly than the market swings we saw 5 or 6 years ago. And the current pricing for tote size A is in that $18 to $19 range. That's a little bit below where it was last year at this time, but still very, very positive, very favorable, and has been very stable. This is a slide that shows the trend line production for red compared to yellow. I mentioned this the last couple of years that this was going to happen, and last year it did. We actually produced more yellow potatoes than we did red potatoes in the U.S., or we actually, I should say, shipped more in the U.S. Just a little over 12 million for yellows and a little over 11.7 million for reds. The projection for this current year, again, we're a little above 12.5 million for yellows and around 12.2 million for reds. That trend is certainly continuing, with yellows now outpacing the red potato supply into the U.S. Shifting gears again now to the russet potato segment. This is the one that's seen a pretty dramatic change year over year. This slide shows the last 10 years of russet U.S. shipments, and going back to 2014, you can see back then we were in that 73, 74 million range for 2 or 3 years, and the trend line has been in the downward direction since then, with the exception of this current year that we are in now. I think we're all pretty well aware of what's happened with the russet supply situation. You can see that rebound there back to 71.5 million. That's up from just a shade under 63 million last year. So a pretty dramatic increase. That's a little over 13% increase. However, if you look back at this 10-year history, it's certainly not the largest shipments of russets that have ever been, but it is having a pretty dramatic impact on pricing and what's happening in the marketplace. And I'm going to talk a little bit more about the inelasticity of the supply in the U.S. russet market here as we go along. An idea of where those potatoes are coming from in the russet category. This is a pie chart showing each region's russet shipments. And you can see Idaho is the large player there, just under 50%. The other three major russet players, as you can see there, the San Luis Valley at 17%, Wisconsin at 8%, and the Columbia Basin at 8%. Those four together make up well over 80% of the total russet potato shipments in the U.S. And again, you can see down there, 71.5 million is our current projection for total shipments in the U.S. This slide shows the weekly shipments of russets over the first half of this year and what we're projecting for the russet shipments for the second half of the year. It's a little bit of a busier slide, but it does demonstrate some key points. So I kind of wanted to show both the grower return index levels, the weighted grower return index levels for all the major russet shipping areas, those four areas that we just looked at, and compare that year over year as well. The heavy green dashed line is the grower return index for all of last year, and the heavy red dashed line is the grower return index for this year to date up through the end of 2023. And going forward, those orange bars are the projected weekly shipments. And again, you can see those bars well above both last year's numbers as well as a 3-year average. To get to that 71.5, we need to ship at that heavy of a rate to clean up the potatoes. In fact, we need to pick up the pace a little bit from where we're at. You can see so far year to date, we haven't been all that far above last year's numbers in a lot of cases. Some weeks have been, but some have not. You can see what the supply situation has done to pricing, and you can see that those bars there in the first half of the year are, like I said, not all that far away from both the 3-year average or last year's numbers. However, the grower return index is dramatically below. Again, this kind of makes the point of the inelasticity of the russet potato supply situation, meaning that smaller changes in the supply side of the equation impact much larger changes in the pricing and the return side of the equation. So this slide certainly demonstrates that. I'm going to show you a couple more examples of that as we go forward here, but bear in mind that that is something that works in both directions, both positive and negative, meaning to say if we have a small decrease in production, it tends to have an outsized or a much higher impact on the price going up. And the same is true if we have a smaller decrease or a smaller increase in the supply side of the situation, that we have a much larger decrease in the pricing side of the situation. So this slide, just to show what we've just been talking about, kind of the data behind the russet potato supply situation compared to the last 5-year average. The average 5-year russet potato supply is just under 67 million hundredweight per year. The average all region weighted GRI for the same time period is 1246. This year, again, we're projecting a little over 71.5 million hundredweight, and the average all region weighted GRI to date is $10.84. Bear in mind that 1084 has at least a month, maybe a little bit more of a much higher GRI, so the trend has been in the downward direction. Coming out of last year's crop, which is a very good return year, those GRI numbers were remaining quite elevated for the month of August and even into September a little ways. So what is this russet supply price correlation? And again, I mentioned this inelasticity effect. And in the past, I've kind of showed you, if you grew a certain number of acres, how much you could expect if you grew 5 or 10 acres less. I'm going to show this inelasticity concept in a little different form this year. Shipment data as the example for this inelasticity ratio. This shows the last 6 years of Idaho's change in shipments year over year. So down in 2018, for example, the total shipments, the change in 2018 was an increase in shipments of 2.5% above the 2017 crop year. that impacted a negative 14.2% change in the GRI. So just dividing those numbers, just the simple math of that, it's a 6-to-1 ratio. Looking at 2019, again, as an example, bear in mind that just like I said, this works in both directions. So in 2019, we actually had a decrease in the supply situation, 6.7% over 2018, and that impacted a 50.9% increase in the GRI, and that was an 8-to-1 ratio. You can see the rest of these as we go along here. Last year was a pretty significant, actually the last 2 years were pretty significant decreases from their years prior. And 5-to-1 ratio, 14-to-1 ratio, it does fluctuate a little bit, but you saw some pretty big, pretty healthy GRI positive changes in those 2 years. Well, this year came along and we are anticipating that 15.6% increase in total shipments. And so far, this is year to date for this number for 2023, the GRI is down 54.8%, and that's a 4-to-1 ratio. The 6-year average of those ratios is right around 8-to-1, like you can see on the bottom there. So 4-to-1 is better, and it's better when you have a situation of increasing shipments, because that could be worse. If you went to the 8-to-1, you could say that 15.6% increase in shipments could have an even larger effect on the GRI. So far, year to date, we haven't quite seen that yet, although the trend has been in the downward direction, although it's been somewhat stable the last month or so. So we hope that continues. We're doing a lot of things that we hope will help with that. Certainly promotional activity and that kind of thing is something that can help this year's market, as well as understanding the dynamics and the numbers in this year's market and the shipment patterns. And that's one of the things that United certainly does. Another way to kind of demonstrate that inelasticity, again, sticking with Idaho as the example, this chart shows the last 10 or 12 years of Idaho russet shipments versus the grower return index. Each dot there represents 1 year. So for example, the 2022 crop year, you can see there that was a very high GRI year and very low shipments. 26 million hundredweight of shipments versus the $22 GRI for Idaho. And again, this is not a linear curve. If the supply situation was elastic, that would be a straight line. And this is more of a logarithmic curve. Again, meaning this is an inelastic situation where small changes in supply impact much larger changes in the return. And we were a little worried about that 2022 year kind of hitting the line, and it turns out it did, because it was such an anomaly, such a low shipment year, and the pricing was so high, but it did kind of fit within this curve. So you can see the current year here, that 2023 kind of highlighted there a little bit. The current shipment projection for Idaho is around 34.3 million hundredweight, in that range. So far, the year-to-date GRI is just a little bit below $10. That's a little better than we certainly would have expected, but again, there's some effect from the higher GRIs back at the first month or so of the crop year in August and into early September. So it has been lower than that recently, but again, overall, that's a little better than certainly we would have expected, which is a good thing. So we want to do all the kind of things that we can to see that continue and try to get this crop cleaned up in the right way and the orderly way, and maintain as a positive GRI as we possibly can. For a couple of reasons. One of the reasons is what I just talked about, some of the things that can be done and are happening to try to move this crop in a good way and maintain the value in it. This is a slide that shows if you went into a grocery store with $1, how many pounds of each of these vegetable categories you could take home with you. So for example, mushrooms down there, if you had $1 to spend at your local Albertsons, you could buy 0.31 pounds of mushrooms. If you had $1, you could buy 1 pound, 1.28 pounds of yellow potatoes. So that's kind of what this shows. So two things really to mention here. One is that potatoes have been and continue to be a very good value at the supermarket. So for the nutritional impact that potatoes have, you can see that the value versus other vegetables is certainly there for your purchasing power. Russet potatoes there at the end. The other point to make with this is that retailers have been promoting the russet category very heavily, and that's a really good thing. You can see in this latest week, we do this on a weekly basis. These are, and by the way, these are USDA AMS numbers, and you can see there or $1 could get you almost 2 pounds of russet potatoes. So that's a really good thing. Now to shift gears again, just take a few minutes to talk about the 2024 outlook. This first slide, as we usually do, takes a look at alternative crop pricing changes year over year versus the Idaho Grower Return Index for potatoes. You can see there, as we're all well aware, the GRI for Idaho is down almost 55%, $18 down to $8 this current year. The other alternative crops that would compete with potato ground, wheat is the primary alternative crop that we use in the model to project an acreage. And by the way, this slide is thanks to Ben Eborn and courtesy of North American Potato Market News. Ben works with us on these models and putting together kind of our first blush at projections. And the model uses that Idaho GRI and especially the wheat price in terms of alternative crop pricing to kind of make some calculations in the model to help understand what might be happening next year. Just kind of going through the rest of these, if you look at barley, both all barley and malt barley, they're about flat, up slightly. Alfalfa is down like some of the other categories, 12.2%. Corn is down 26%. Soybeans down 8%. So you can see most of the alternative crop pricing is down year over year, along with the potato grower return index. One of the other things that needs to be understood when we talk about how a grower looks at what he might plant next year is the cost of potato production. Again, this is courtesy of Ben Eborn. Ben does the cost of production estimates for Idaho each year. And so the latest year we have is 2022. We'll be looking at another one here very shortly for 2023. But for now, you can certainly see the dramatic increase in the cost of production in Idaho over the last 2 years. It was fairly stable for a number of years going back into the mid 2010s, started increasing a little bit post-pandemic, and certainly, like all segments of the U.S. economy, increased pretty dramatically with inflation over the last 2 years. So from $8.25 in 2020 all the way up to over $12.50 in 2022. So that does have an impact on how a grower may think about potato production and how many acres he wants to plant. If you're sinking a lot more investment, a lot more capital into your potato crop, that gives you certainly reason to think about that. And so just to go through kind of a summary of those things, the slide we already talked about the weaker alternative crop pricing, but also thinking or seeing that there's a weaker Idaho Grower Return Index. Putting those numbers into the model would suggest that there would be about a 2 to 3% decrease in acreage this coming year. But again, some of those other factors that go into this, the cost of production that we just looked at, the increase is probably moderated to some extent this past year, certainly in the areas of chemicals and fertilizers, but other segments probably went up a little bit more. So all in all, it was probably some moderation, but still some slight increase in the cost of production. The other factors, water is always an issue, certainly in the San Luis Valley as well as in Idaho. And seed supply is an issue, although last year you'll remember we had some discussions about shortages in seed supply, and some of those did not come to fruition. Certainly they did in some categories, some varieties of seed were in short supply, but overall it seems that the seed is always one of those things that that gets found if a grower wants to plant those potatoes. The processing situation, there continues to be demand increases in the processing sector, not only domestically but particularly in international segments. Uh, pretty significant capacity increases continue to happen in the North American processing sector. There has been some rationalization of excess raw material that's happened in this current crop year. Some of that has already taken place. That is a good thing for those potatoes to be off the market, so to speak, and not bear over the top of the fresh market. There are other external market factors that we have to be aware of. In international market access, certainly the access to Mexico is a really good thing, and especially in a year like this where we have enough potatoes to meet that increase in demand down there. There continues to be ag labor uncertainties, and while the potato category is not quite as labor intensive as some other fruits and vegetables and some other specialty crop categories, it certainly continues to be an issue even for the potato category. I'll leave you just with this thought, and that is that if you return to volume shipped in prior years, the market tends to value that crop the same as it did in those years. So again, it just kind of goes back to the effect of having a supply situation that we really need to pay attention to because it has an outsized impact on the return pricing side of the equation. So uh, just one of those things that we all need to keep in mind going forward as we plan for next year's plantings and the acreage for next year's crop. So with that, I will conclude this part of the presentation and just thank you all again very much for your interest and your attendance in watching this this year's version of the Potato Business Summit. Thank you all again.